Welcome back to the Property Frontline. Today I'm here with Ken Hew from Avvora Finance. Hi Ken.
Hi Deb.
And we are talking about what's happening in the market at the moment and also covering some tips for how to make the most of it. So what's happening in the market at the moment is that we're dealing with a very, very hot sellers market, particularly for houses. And but for apartments, the market has softened dramatically. But from what I'm seeing, it's not going to stay that way for very long. So do you have much that you would like to comment on in relation to prices and how fast the market is moving, Ken?
Yeah, so I certainly can. It seems like there's a lot, from a credit perspective anyway, there's a lot more inquiries coming through for purchases. Towards the end of last year, majority of applications were for refinancing to try and make people reviewing their interest rates and seeing if there's savings. But recently, I've seen a lot of purchase inquiries come through. And a lot of situation, the common theme is that they're just unsure on whether they know they want to purchase property, but they're not sure if they can or where their finances sit to be able to enable them to enter the market. So.
Yeah, because the banks have lowered the interest rates, and where once you might not have been able to afford it only weeks ago, now of course you can. So
yeah, so the lenders are still. They seem to have stabilized in terms of their lending. Some are easing a little bit more. But yeah, there's certainly not too much barriers as compared to last year to get access to credit.
Yeah. Okay. So let's talk about the forecasts. So last year, the big banks were absolutely way off the mark in relation to where they were forecasting the market to head. And Lewis Christopher was in 2020 the only forecaster who got it right. He does consistently get it right, so that's why we should look at what he's forecasting again for this year. But the banks are again saying the same thing. It's almost like they call one another, like no one's game enough to change anybody, to contradict anyone else's opinion. But the banks in the main are forecasting the general market, so nationally, between 10 to 15% of an increase, which is huge. And Lewis is more around the 8%. But what we need to remember is this is a very top line figure. So once you go down to the actual area or street that you want to buy in, you'll find opportunities and traps. So that's where, you really need to look at the data more closely. But what I'm seeing from the buyer's side is because there's all these bubbly forecasts about the market, it just seems like buyers are like, oh, well, I can just buy anything and, they'll be fine, that the market will always continue to go up or that they won't lose. So do you have any opinions on that?
Well, I was actually going to ask, is there any particular types of property that you kind of see moving and the ones that are not moving or going backwards or?
Yes, that's a very good question, Ken. So there is a couple of categories of property where it's really like it's got red flags all over it. So first of all, you have to be very, very selective if you are thinking about buying an apartment. Really, in property, like there's some certain rules, but there will be opportunities if you do your research, but where people really lost a lot and will continue, like they may never recover, is in apartment complexes where there's thousands of apartments or where the builder is just absolutely terrible. So there's over the last 20 years we've had a lowering of our building standards in Australia, and so really apartments, if you were thinking about that, I would look at anything that was built since 2000, the year 2000. I would probably look at very, very carefully, and I would prefer to buy older apartments. And those older apartments normally have a lot more opportunity in them for equity and for renovating them.
Improvement.
Yeah, improvement. And the other key category of property that I would really avoid is the house and land package type of thing, where you're buying this, supposedly 3-bedroom, 2-bathroom mansion, but where the bedrooms are like a box size and the land size is almost as small. And the reasons why it's really bad to buy those types of properties is they'll normally be in fields and fields and fields of the same type of property. So there may never ever be a chance for equity growth or capital growth, and you'll have very, very limited, if any at all, opportunity to add value. And worst of all, there's usually like green fields around them, and so there's even more houses coming in. Yeah,
it's interesting that you mentioned the units, especially the high density, like the more the multi-story with hundreds of units in them.
Yeah,
because lenders, this is following the Opal kind of tower.
Opal
and there was a few others. Some of the lenders were risk adverse or tightened their lending specifically for that type of security or property. Capping the LVR or loan to value ratio for those types of units. I can't say the same for townhouses, villas, houses, freestanding dwellings. So it's interesting. Some of them have backed off and kind of allowed the lending, and they're still kind of comfortable in that space. But it just means if you are keen for those particular types of properties, you might just need to double check with the lender and make sure that that's not going to cause any dramas down the track with your home loan application.
Yeah, because they either won't loan for those types of properties, or they'll only give you like 60% instead of
to reduce their risk. They won't lend you, say you're wanting 80, 90%. And it's funny how they also categorize high density differently. I'm thinking of two lenders. One is just based on postcode. So if you're buying a unit, regardless of how many units are on the property, they'll just cap it. And then another way to categorize it is if it's over a certain number of dwellings within that unit and in that postcode, then that's classified as high density. So I would recommend that's something to check with the lender.
Yeah. Okay, that's good. So the way to protect yourself from making mistakes is to really do some simple comparison searches. And just going to one of the main property sites like realestate.com or Domain, and just put in the property that you're looking at and compare it to what's been sold recently and other properties that are on the market. I have developed up a little course to show people how to do that if you want to get, really do a deep dive. But other than that, it's very easy to protect yourself from buying a mistake. And it's really just making sure that you do some good quality research and make sure that, number one, that your strategy is in place. But yeah, so if you've got any questions, don't hesitate to reach out to Ken. And so Ken's email is kenh@avvora Avvora, AVVORA
Yep.
.com.au.
Yep.
And me, and contact me through Debra at propertyfrontline.com.au. Thanks very much.
Thanks.
Bye.